Welcome back to episode 3, and we're going to talk about alternative investing today. My name is Douglas Muir, and I'm the president and founder of the Family Business Fund. So alternative investing is a lot different than traditional investing. Traditional investing, you all probably know, is the New York Stock Exchange. You have an investment advisor. You call them up saying, hey, buy Coca-Cola, buy GE. The Family Business Fund, and what I've learned, is alternative investing. And so what makes it an alternative? An alternative means that it's a private placement memorandum. It's registered with the Securities and Exchange Commission, and we're allowed to raise money. The underlying asset could be different. For an example, a REIT, a real estate investment trust, has their underlying assets are houses, buildings, right? So you will pay them, let's say $20,000 a unit, and they'll put it into their real estate investment trust and pay you back 12.5%. The Family Business Fund, we're considered our underlying assets, it's debt, right? So as long as the debt is performing, we pay out 20%, and we monitor the debt. We do merchant cash advances, and so it's different than just traditional. The thing is, people have wrong myths about the types of alternative investment. One, they think it's more volatile than the New York Stock Exchange. Let's just take that one myth. That one myth, we have a volatility index in the New York Stock Exchange. The volatility index, the higher it is, the more volatile it is. When the coronavirus hit, it was at a 78. 78%, the volatility was crazy. The norm, when I was on the New York Stock Exchange, was between 10 and 15%, right? A 10 or a 15 number. So the volatility is a lot higher. With a private placement memorandum, how could that be, right? I am a high yield fixed income. That means fixed. No matter if the stock market's up, no matter if the stock market's down, it is fixed and you get the percentage, right? So that's one of the myths. Another myth is that, investors need to put their money into these private placement memorandums for a long time. That's not a true statement. In the Family Business Fund, we do have a lockdown of 18 months, meaning you have to keep your money there for 18 months, because what we're doing is we're giving cash advance on our money, so we have to hold the money for a little bit of a term. 18 months is not a long term. Some people think you need to be in for 3 years, 5 years. It's been said that a alternative investment, being more risky, fails more often. That's not a true statement. Actually, when I looked and studied the industry, having 47 downturns in the market since 1779, that is a higher risk than putting your money into an alternative investment, right? Because of the volatility. So that's not true. The alternative investment is expensive. Well, actually, I charge no fees. The Family Business Fund, private placement memorandum, we charge no fees. Now, when I was with an investment advisor, he was charging at that time 2%. So let's say the stock market went down and I lost $500,000. He would still take 2%. Now that's the type of job I want. At the Family Business Fund, we are a fixed rate, meaning we pay continually, and we charge no fees. And so that is one of the biggest myths that I really want to dispel here. Now that you've learned about what alternative investing is, let's look at what I dispelled with the myths compared to the Family Business Fund. So alternative investing is not more volatile. If you think about it, the Family Business Fund is considered a high yield fixed income. We pay 20%, no matter what the stock market does, we pay 20%. So that's one myth that's gone. That you have to be an institution to be able to invest in the Family Business Fund. That's not true. All you have to be is an accredited investor, and that just means you need to be able to make $200,000 a year or more, or with your loved one, $300,000 a year or more for the past 2 years. So that's another myth that we need to dispel. Also, in my studies, I've learned that a lot of people think that traditional investing has a lower failure rate. Well, if you're in the stock market, you have learned about the failure rate. You've watched your 401k go to a 201k. With private placement memorandums, it is so slim of failure rates that's infinitesimal. And that is from my studies. So the family business fund is less risky than investing in the stock market, and it's more robust, meaning you get more money from your dollar invested into the family business fund. And if you want to learn more about this or alternative investing, please feel free to contact me anytime.